From New York to our TV and radio audiences worldwide, I'm Taylor Riggs. Welcome to Balance of Power, where the world of politics meets the world of business. And we go straight to the world of business with Abigail Doolittle. Abigail, we feel like this value from growth rotation is underway. Are we also seeing a little bit of that as well this morning?
You know, Taylor, the truth of the matter is right now we're looking at a slow summer Friday. Not a lot of action overall for stocks at this point. It seems like a lot of investors have checked out, maybe on the beach. We have barely any movement for the major averages. But yes, we do have just a little bit of a favoritism toward the cyclical sectors, considering that industrials and energy and financials are among the top sectors. And that is showing with the Dow and the S&P 500 up a little bit. The tech-heavy NASDAQ is down just a little bit. Interestingly, there is a bit of a haven play going on at this point. We have the 10-year yield actually down, telling you that bonds are rallying. We also have the yen rallying against the dollar. So while stocks are just shuffling along on this Friday, there's a little bit of, again, a haven bid signaling some uncertainty on the part of folks, as we're, of course, still waiting for some sort of a fiscal stimulus package around the pandemic out of D.C.
What are we seeing on a sector level, of course, as we wrap up the first 2 weeks of August?
You know, so it is that cyclical tilt. It's really interesting because yesterday and the day before, it felt like technology was really gaining. And so everybody was like, oh, is this going to be a false start? But so far in August, the top sectors for the month of August are among those cyclical sectors, such as the industrials, energy. Consumer discretionary is in there as well. And that, of course, is one of this year's defensive sectors. But nonetheless, it seems as though the reopening sectors are taking a little bit of a gain and also giving that idea support. The Dow Transports up until yesterday had been up 11 days in a row, the longest streak since 2010, up again. That's the one index that is actually really gaining on the day right now, up 1.3%. So investors are hoping that there's going to be some sort of a promising reopening ahead, or at least that's what some of the sectors in the stock market are telling us at this point.
Our thank you is always there to Bloomberg's Abigail Doolittle. I now want to go on over to our chief Washington correspondent, Kevin Cirilli. He is standing by at the White House with more on that landmark deal between Israel and the UAE. Kevin, take it away.
Thank you, Taylor. We're joined now by Jared Kushner, who was one of the key architects behind that UAE-Israel deal. How did the deal come about? Are other Arab states going to follow, like the Saudis?
So first of all, yesterday was really a historic day, and it was an honor for me to be a part of such a momentous breakthrough. It was the first peace agreement that we were able to see in the last 26 years. The last agreement we saw in the Middle East was between Israel and Jordan in 1994, and we've had a lot of problems in the Middle East since then. So President Trump's leadership, he outlined the vision for what he wanted to see changed in the region between 2017 and today, and the hard work over the last 3.5 years helped bring this forward. So I do think that this will change the paradigm. People in the Middle East were very resigned to the fact that things were not going to change. Everyone was very able to tell you what the problems were, but nobody was able to find solutions. What President Trump came in is he brought a fresh approach. He reestablished the alliances and strengthened the alliances with Israel and UAE and Egypt and Jordan and everyone throughout the region. And by taking a very serious, no-nonsense approach to deal-making, President Trump was able to make a breakthrough that nobody's been able to make before.
UAE officials have said their phones essentially have been ringing off the hook in terms of back-channel talks and whatnot. I'm curious, have you spoken with MBS since this has been announced? And do you think, and I know you're not going to broadcast here, but do you think other Arab states could follow suit here like the Saudis?
Do you want me not to break news on your show?
I would love if you broke news.
No. So one of the great things we did yesterday is we were able to keep it a secret, and the president's tweet is really what broke the news, and people were surprised that a deal of this historic magnitude was able to stay quiet. We've built a lot of trust with people in the region. We have tons of discussions with people ongoing. We've had them for the last years, and people are very, very positive. I think the press in the region has been quite positive. People are seeing that the Crown Prince Mohammed bin Zayed step really was a historic step forward. He's always been a leader in that region, and a lot of people want to come very close behind him because they realize that by taking this step, it will make the region more secure, more economically prosperous, and it also will help the Palestinian people in the long run.
Have they agreed to purchase new military weapons from the United States, like drones, for example? Or can you give us anything about the purchases that they will make from the U.S.?
Yeah, so we have an ongoing relationship with the United Arab Emirates as well as with Israel for a long time. They're one of our closest military partners, and so there's always ongoing discussions about how we can strengthen the relationship, create more interoperability between our forces, and obviously there's the common enemy, not common enemy, but you have Iran right now who's been threatening UAE, been threatening Israel, been threatening America, and then funding a lot of the proxies fighters that are causing instability throughout the region. So security's never been more important, and we're always in discussions with our allies about how we can continue to advance and make progress to make sure that the region can become safer.
The last time we spoke, it was following the announcement of the Middle East peace proposal from this administration, and one of the items outlined in there is the two-state solution. Prime Minister Netanyahu says that he will not have annexation in the Western Bank for the time being. How crucial of a will this deal unravel should Prime Minister Netanyahu ultimately, in the longer term, pursue annexation?
Look, Prime Minister Netanyahu is a visionary leader. He's very tough. He understands what's important to the Israeli people, but most importantly, he understands what's critical to Israel's security and Israel's economy. And so right now, he believes that it's much more important to strengthen the relationship with United Arab Emirates and other regional Arab countries and to figure out how we can create that cross-pollination between the populations. And by doing that, I think that you'll see that'll make Israeli safer. So when he gives his word on something, I take his word.
The other week, I was speaking with Jason Greenblatt, a previous administration official here at the White House, and he noted that there had been some optimism, some hope in terms of how Palestinians and the Israelis were working together on COVID-19. Not all the way, but some areas, and especially how the economic situation because of the pandemic and the medical situation in both Israel and Palestine has forced them to relook at things regarding water, cybersecurity, and technology. However, the Palestinians really denounced this deal. At what point do you have to put additional pressure on Palestine in order to get them to broker that Israel-Palestine deal?
Yeah, we don't want to pressure the Palestinian people. And look, I think a lot's changed over 25 years, right? People have seen that a lot of the approaches haven't worked. People want better lives for their children. They want to live in peace. They want security. They want economic opportunity. I think that that's just the natural evolution. People are tired of conflict, tired of war. The Middle East has had problem after problem after problem. President Trump's come in. He's recognized the realities on the ground, and he's tried to sort them out as we go. And so with regards to the Palestinians, what we did is we laid out a good vision for what can happen. We got Israel to agree to a Palestinian state. We got Israel to agree to potential borders through a map that we published. And we have we created a conference in Bahrain where the international community came together and endorsed our plan to provide $50 billion over 10 years to double their GDP, create 1 million new jobs, and help them have a better quality of life. So when you see denouncements and disagreements, I think that the people, the Israeli people and the Palestinian people, are much closer together than perhaps where the Palestinian leadership is. And so the hope is that over time the Palestinian leadership will see that they have so much more to gain for their people and for their legacies by engaging and resolving these long-standing conflicts than by putting out the same tired statements that, quite frankly, haven't brought progress for their people.
I've got two more questions for you. One as it relates to Iran. From a geopolitical sense, you know this, Democrats have been campaigning saying that they would rejoin the Iran deal. Senator Kamala Harris, who of course was named as the running mate to the presumptive nominee, has said she wants to rejoin the Iran deal. Democrats say that coalition building is a contrast to the foreign policy strategy of this administration. How important of a role did Iran play in these negotiations, and what's your response to those who argue that the Iran deal would restore some allies?
Look, I think that Americans are smart, and one of the reasons why people elected Donald Trump is because Americans were tired of their politicians making stupid deals. The Iran deal was one of the worst deals that any American diplomat had ever made. It put Iran on a glide path to a nuclear weapon. It gave them $150 billion, which they used directly to fund terror. And, you know, it's not like the next day they said, okay, America's great, let's work with them. The day they signed the agreement, they were in the streets chanting death to America, death to Israel. So I'm not sure what that agreement accomplished other than antagonizing everyone all over the world. So it was a terrible deal. America made terrible trade deals. President Trump has changed all of that. The American people want to see our troops brought home. President Trump has tried to end the war in Afghanistan. He's already reduced our troops there significantly. He wants to rebuild American cities. He doesn't want to rebuild other nations. And I think that President Trump, as you've seen through this, a lot of the Democrats have attacked him for his diplomacy. He's going to cause wars. He's isolating. Well, that hasn't been the case. he was able to create a historic peace agreement yesterday that the previous administration and the administration before were not able to accomplish. So I think that with President Trump, you have to separate the media and you have to separate the political jostling from what he really does. And what he does is he brings a common sense approach. He's not afraid to say what he thinks, and he brings results, and that's what the American people want. So I would just say this, rejoining the Iran deal on the old terms would be absolutely catastrophic for America. It would be catastrophic for Israel. It would be catastrophic for the whole region. Because again, what the vision of what Iran wants to see is not consistent with what's in America's interests.
Final question, this Kodak deal temporarily on pause. Are you optimistic that this will get back through, or is it just going to end up in a regulatory quagmire?
Yeah, I'm not up to speed on the latest with it, but I know that that they put it on pause, and that was the right decision.
Chair Kushner, thank you very much for your time here at the White House. Taylor, talking about that historic Israel-UAE deal. Back to you in New York.
Well, and thank you as always there, Bloomberg's Kevin Cirilli, and he's going to be running back to the studio so he can join me a little bit later this hour as my co-host. Stay with us because coming up we will be speaking to Mike Novogratz of Galaxy Investment Partners. All of that next. This is Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg Television and Radio. I'm Taylor Riggs. Now, the last time we spoke with Mike Novogratz in July, the longtime money manager who now runs digital currency investor Galaxy Digital Holdings, well, he told us he was expecting Joe Biden in the White House next year. A lot has changed since then, including presumptive Democratic nominee naming his vice presidential pick, Kamala Harris. I'm pleased to welcome now Galaxy Investment Partners founder and CEO Mike Novogratz, along with Bloomberg Wall Street correspondent Sonali Basak. Sonali, take it away.
Thank you, Taylor, and thank you, Mike, for joining us. You know, the Kamala Harris announcement this week was big news on Wall Street, very well received among many people in the financial community. Mike, do you think she would be tough on Wall Street?
Listen, I think Kamala is going to be fair on Wall Street. The Democrats are going to be tougher on Wall Street in terms of the tax plan, right? You're going to raise corporate taxes, you're going to raise personal income taxes, and you're going to raise, most importantly for the stock market, the capital gains tax, up to income tax. And so, you know, electing Biden and Harris, as much as it's going to be great for the country, is not going to be great for the market.
It's super interesting here because also, aside from the taxation, the vice presidential pick doesn't do much by way of financial policy. People are going to be watching very closely to that Treasury pick, to the SEC chair, should they get elected. What are your expectations, are the types of moves that they would make to really regulate this industry in a different way?
Listen, I mean, the Biden camp and all the people I've spoke to in them are quite centrist, and they're, to be fair, more conservative than the Trump camp, right? These guys are fiscal, they're Keynesians, but they're fiscal conservative in that they're not going to, they know you can't keep spending forever without having some offset. And so I think you're going to see tax hikes on the wealthy to fund some programs. Listen, the country's skew on distribution of income has gotten as wide as it's been ever. When you've got guys like Jeff Bezos worth $180 billion and the average American not doing as well, the Democrats feel like there's some time for change. And I think most people in America agree with that. It's a question of how it's done, if it's done fairly and transparently. That's been the problem in many, many tax regimes is no one feels like they've been fair and transparent. And I said that'll be the big test.
Are markets prepared for that, accurately pricing in higher capital gains tax, higher taxes in general?
I don't think so. I think, listen, we are in a liquidity-driven frenzy. You know, I called it irrational exuberance. You look at Tesla stocks up 20% because they announced a 5-to-1 stock split. Like that, in some ways, makes zero sense. It makes lots of sense in this environment because everything is trading literally like Bitcoin in 2017 into a speculative frenzy. Those frenzies, bubbles normally end with policy response. Usually it's Fed action. It could be, action on raising taxes that could end this froth we have. I mean, Amazon's an amazing company. It's doing amazing through COVID, but it's trading at 100 times earnings on a gigantic multiple. On a gigantic earnings base. And so I think we're in bubble territory, and I think the election might be what ends up, at least stopping it for a while.
Well, you mentioned a few volatile stocks there, Tesla for one, Bitcoin for another, and I want to go there with you on Bitcoin. Is it an appropriate store of value in these volatile times?
I think it is. Listen, I think Bitcoin crossed the Rubicon in the last year for being, something that people thought, well, maybe, to something that people think is. And so you have institutions joining, you've got one by the next, banks looking into how they get involved. And I think it's literally a downhill race from here as opposed to an uphill race. The first 4 years of my existence in the crypto space, or 5 years, I was always pushing the ball uphill, and it feels like it's rolling downhill all of a sudden. And so, I like Bitcoin better than gold solely because Bitcoin's been hard to buy. It's only got a $220 billion market cap, where gold is, over 10 trillion. And so Bitcoin's got a long way to go to catch gold in just adoption. That said, I still think gold goes higher.
Mike, where do you think gold should be ending up by the end of the year?
Those are hard predictions. We've taken out the old high. And so could it be 2,500 to 3,000? It certainly could be. Once you take out old highs in markets, it's really hard to figure out where they end. I don't think anything changes between now and year end in terms of the profligacy of the fiscal side and the Fed just printing more and more money. I think the Fed is going to even go more dovish at this next meeting. And so that could be the next juice that accelerates gold and Bitcoin.
So, Mike, given that we're talking so much about Bitcoin, how much of your wealth is tied up in Galaxy and the crypto industry?
Well, listen, Galaxy stock has gone from roughly $1 to $3.50, so more of it than was at the beginning of the year. I tell people to put 1% to 2% of their money into Bitcoin if they're starting. It seems like the right amount to do it. I have a lot more of it, 25% ish in Galaxy or and Bitcoin. But that's because I run a company that's doing it. I don't think that's necessarily the prudent thing to do.
Other cryptocurrencies you like besides Bitcoin?
Listen, Ethereum has been on a tear recently. Ethereum is the protocol that has the market lead to be the base layer of trust where lots of stuff gets built. So decentralized finance, i.e. finance that doesn't need a central figure, is booming all of a sudden. But this stuff, to be very careful, we're all still in what I call venture stage in everything but Bitcoin. There's a lot of excitement in the space right now. There are a tremendous amount of talented people in it. The human capital spends most of its time in and around the Ethereum blockchain and programs building on that. Bitcoin is almost a finished system. And so Bitcoin is literally now one of distribution.
Mike, given that you've been talking about this bubble territory, is there anything you're shorting now that's interesting?
I've tried to short, and I've burned my hand, and then I burned my other hand, and I burned my tongue. It's a very dangerous place to be short, right? I shorted Wingstop because I own a big stake in a private fried chicken company, and I look at Wingstop as a growth stock in a space I like, but it's trading at 90 times earnings for a chicken company. That makes no sense to me. We bought a similar company with similar earnings for let's say one-eighth the price at one point. And so I think public markets in some story stocks are way, way overvalued.
How are you thinking about just this general theme of people moving to the suburbs? We're here, of course, in New York, and there's been so many calls within the commercial real estate market that we're going to see a little bit of a collapse. What do you think?
I think New York City will always be New York City. And as soon as we get the all clear sign from COVID, you're going to see young people move back to the city because that's where the energy is. But right now, listen, we don't have the all clear sign. And I've got employees that want to stay in the suburbs. You've got school decisions being made now. And so I think it's going to take longer than I originally thought. It might take a full 6 months to a year after we get the all clear sign to be able to scratch their head and say, why in God's name did I move to the suburbs when I could have lived in New York City or any city?
You were talking about taxation, though, Mike, here, and we got time for this one more question here. I mean, New York has high taxes. Are people going to want to hire here? And are people going to want to live and work here?
This is a very fair question. I have lots of friends that have moved to Florida. I like visiting Florida. I would never want to live there. But a lot of friends make a decision that, they'll save enough on tax that they're worth, giving up New York or another city. And so it's something I think, New York taxes are certainly as high as they can go. We're seeing that outflow of human capital because of tax. And so it's something, and this is going to be really hard because state and local government budgets have been decimated, just decimated. And no one has woken up yet to the fact that, oh my goodness, next year we're either going to have to get a huge bailout from the federal government or services are going to go down. And so it's going to be a very tough run for cities.
Not sure that the muni market has woken up to that fact either. Our thank you there, Mike Novogratz, founder and CEO of Galaxy Investment Partners, and as always, Wall Street correspondent Sonali Basak. And a program you know, Bloomberg TV and radio will have coverage of the Democratic National Convention next week, 10 p.m. Eastern. This is Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg Television and Radio. I'm Taylor Riggs. Time now for Stock of the Hour. Retail sales making their way all the way back in July, albeit climbing themselves of a pretty deep COVID-19 hole. Here's Abigail Doolittle with a look at that comeback. Abigail, up 7%, not bad for Macy's.
Yeah, Macy's is having really a great day, and that's true for a lot of the retailers. And there appear to be a few reasons here. Now, one of them, retail sales, and we'll talk about that in a moment. But we also had a very nice report out of Dillard's, a surprise report, really, one that Kelsey is calling a sale in the wins, or wins in the sales, I should say. And they basically put up a much smaller loss than expected, 37 cents versus a loss of $4.82. This was a pre-announcement, so I think that folks are really hoping that things are turning around, perhaps for some of the retailers and the department stores. Relative to the retail sales, while they missed the estimate, the overall survey up 1.2% in July versus the survey up 2.1%, you can see the value is actually higher than pre-pandemic levels, so that's very positive. And doing the best in the month of July, electronics and appliances, gas stations or gas, so people are back out on the roads, and then clothing. So there's some bright spots there relative to retailers, and so we're seeing it for some of the stocks today, Taylor.
Abigail, though, we know that not all retailers are created equal. Department stores still struggling?
Department stores are indeed struggling. However, one stock that is not struggling, Amazon. So take a look at this. In the Bloomberg terminal, we do have Amazon up in a huge way on the year, and that's really boosting the overall retail index up 70%. But Taylor, to your point, and to bring it full circle, we might have a great day for Macy's on the day, but on the year, the department stores down more than 55%. And a piece of this, Taylor, they're up in also from the March lows, but prior to the pandemic or around the pandemic, falling about 80%. That brick and mortar part of retail really still struggling.
More divergence between the haves and the have-nots within retail. Thank you, Abigail Doolittle. Stay with us. Up next, we're going to get a read on the state of the U.S. Treasury market and more with Guggenheim Partners CIO Scott Minerd. This is Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg Television and radio. I'm Taylor Riggs. Let's get on over to the first word news. We do that with Mark Crumpton.
Taylor, thank you. Talks on another round of fiscal relief from the pandemic are stuck on about $1 trillion in aid to state and local governments. Democrats have offered to cut their original demand for $3.5 trillion by a third, but are insisting on the government aid. The White House has offered no more than $150 billion for that. Negotiations are at a standstill heading into 2 weeks in which both Democrats and Republicans will hold their national conventions. Secretary of State Mike Pompeo is urging the world to back the arms embargo on Iran. The UN Security Council is set to vote on extending the sanctions, which are due to expire in October. Speaking in Vienna today, Secretary Pompeo said, quote, "It makes no sense to permit the world's largest state sponsor of terrorism to purchase missile weapon systems." Survivors and relatives of those who died in last week's explosion in Beirut are demanding answers. They are asking the UN Security Council for an international investigation. Many want the probe taken out of the hands of the Lebanese government after that probe started with political wrangling over the naming of a lead investigator, military threats to jail leakers, and doubts over whether the panel could be impartial. Hong Kong media tycoon Jimmy Lai accuses China of arresting him on trumped-up charges. In an interview with Bloomberg Television, Lai pushed back against that sweeping new national security legislation.
Before any evidence, they just claim presume that I'm guilty. So, this is not the way the law is. I should be presumed innocent. And one thing I can say from the statement they made is, we have never support independence of Hong Kong.
And Mr. Lai says the new law has curtailed the pro-democracy movement, but supporters would find new ways to back the cause. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you, Mark. Now, the U.S. Treasury market headed for its worst week in months after an attempt to sell a record quantity of 30-year bonds, and it received, well, less than enthusiastic response for buyers. For more, Bloomberg's Scarlett Fu is standing by with a special guest. Scarlett?
Thank you so much, Taylor. That's right. I am joined now by Scott Minerd. He is the CIO of Guggenheim Global, which oversees about $260 billion in assets under management. Scott, it is always a pleasure to speak with you. And let's start with Treasuries, where we've got a sell-off this week that has pushed the 10-year yield to an 8-week high. Granted, we're talking about 72 basis points versus, say, 95 basis points in early June. But this felt like a significant shift. In late July, you had said that markets could drive rates below zero, even without the Federal Reserve setting a negative rate policy. What's your read on the recent rise in rates, and are the drivers for negative rates still intact in your view?
Well, Scarlett, some great questions. The first thing is that the seasonality here for bonds turns negative. Traditionally, the bottom in yields for the next couple of months is the second week of August. So the sell-off arrived right on schedule. I'm not surprised, but having said that, we have a pretty good support on bonds and in terms of our 10-year notes, and in terms of getting rates above, let's say, 1%, I don't think that's very likely. As far as the negative rates are concerned, I'll tell you, the Bloomberg ran a fantastic interview today with Lacey Hunt, and he points to a lot of the same things I do, which is that there's a lot of deflationary pressure. All the debt piling up out there is essentially deflationary. And our models, which have been reliable for the last 35 years, basically indicate that we should expect that between here and, let's say, the next 18 months or so, that we would see the 10-year note go to negative 0.5% or negative 50 basis points. But the estimate range is between negative 2% and negative 1 or positive 1. So, we have never missed hitting the target number in the model. And as a matter of fact, we've never failed to overshoot to the lower end. So, I still remain bullish on bonds longer term. They don't represent good value. They give incredibly poor returns, but the pressures in the economy look like they will ultimately turn back to negative, whether it's in the fall because we don't have stimulus packages, or whether it's longer term because we've done some real permanent damage to the economy. And it'll take a long time to get everybody back to work.
Okay, that's for the longer term, but in the short term, we are seeing eco data this week that showed increases in prices both on the consumer and the wholesale level. Do you see any sign that fears of deflation are giving way a little bit to expectations of a more sustained increase in prices?
Oh, absolutely. I think that the bounce back in prices sort of caught some people off guard. It's not to be unexpected, because when you have some prices plunge as much as they did, like oil and petroleum products, it's not unusual to see a bounce back once the economy reaches some level of stability, which it appears we have. So I think that inflation is now back in the front of mind for most investors, and ultimately, that the resolution around inflation is going to be one of the big determinants of where we end up with bond yields.
Now, Taylor had mentioned earlier about the Treasury auctions, and of course, we are seeing a lot of supply being absorbed by the U.S. Treasury market right now with record-sized auctions of longer-dated debt. Is that messing up the market's signaling function?
Well, I think the market has to adjust for the increased supply and find rates where we can actually clear this stuff comfortably. But the other side of it, Scarlett, is that the supply function is also being heavily affected by the Federal Reserve. And the Fed has made it clear to us that they do not want to see long-term rates rise. And I would expect in the policy statements coming in September that we will see some commitment to keeping rates lower. And so I think the weakness in bonds, especially from here, would be a buying opportunity.
Got it. Now, the improved economic data that we have been seeing of late, whether it's jobs, whether it's in other pockets of the economy, to what extent does that remove some of the urgency from the stimulus talks? How much does the stock market versus the bond market depend on those benefits getting extended?
Sure. Well, it's really interesting to watch what's going on right now. I realized the other day that when you look at things like credit spreads, historically those are driven by the economy. But the market has turned everything on its head and said, well, now the Fed is controlling credit spreads, so that must translate into economic activity. Actually, credit spreads on corporate debt don't really mean much to Main Street, and the stimulus is what really matters. So the lack of progress in stimulus, which I don't think we're going to get anything until September at the earliest, which means stimulus checks won't arrive until October, and maybe even the extended unemployment benefits won't be solidified until then. We're leaving ourselves exposed to an air pocket. And I wouldn't be surprised to see the August economic data and the September data to be, very disappointing.
Compromised, right. Now, speaking of stimulus, I know that one thing you believe Congress should take up, one measure that they should really consider is a payroll tax cut. But this is a bit of a political quagmire. It's kind of loaded because President Trump has been pushing for something like this even before COVID, and it makes it a little bit politically untenable for a lot of members of Congress. What is your view here on how the administration and Congress should proceed with a payroll tax?
Well, I think first off, the real test sits in the Senate because the Senate is the place where we could actually get this kind of discussion rationalized. But, my view on the payroll tax holiday is it would be stimulative for the economy. It would probably add 2 million jobs to the economy. I'm in favor, though, of a period of a payroll tax holiday, which is voluntary on the part of participants, which in exchange for getting a holiday on the payment of their payroll tax, they agree to extend their retirement age. And when you look at the numbers on this, based upon the proposal that I've shared with Bloomberg's and others, this would free up another $15 to $20 trillion in savings for the federal government, which could, a large portion of that could be used to provide additional stimulus, extended unemployment benefits, stimulus checks, and, even an extremely large infrastructure program like $3 trillion. A $3 trillion infrastructure program would not only help get the economy going again, but since state and local governments basically spend most of the infrastructure money, it would help shore up the state and local finances without having the administration to have to compromise on their tough position in terms of helping state and local government.
Okay, so what you're proposing sounds like it could be a win-win. You speak regularly with Fed officials, with folks in Washington. From the Federal Reserve's point of view, and of course they try to remain neutral in all these politics, what would be the main objection to a payroll tax cut?
I think the payroll tax cut that I'm talking about, I think, though I've never directly gotten feedback from them on it, they would see as fiscally responsible. As you know, there are a number of people out there, whether it's the conservatives in Congress or people at the Federal Reserve, which are concerned about the sustainability of deficits in the long run. By doing this, we would reduce our long-run deficits in the United States, and it would help secure the ratings, which are currently being challenged by Fitch and other rating agencies as downgrading the United States government.
I want to get your thoughts also on just the framework that different policymakers and politicians are using when it comes to coming up with solutions for the slowing economy. The pandemic has created a new normal for all of us, a new normal daily routine. To what extent do you see evidence that policymakers and economists are relying on old solutions, the old playbook, rather than creating their own new normal in addressing how to tackle some of these challenges?
Well, just like the financial crisis, Scarlett, one of the major mistakes in the financial crisis was that Washington did not use it as an opportunity to deal with the true structural reforms that were necessary in the economy. And, the famous line that, don't let a good crisis go to waste. There's an opportunity here that Congress can implement big structural reforms, not just my ideas, that could really change America and improve living standards, get rid of income inequality or reduce it, and assure the expansion for a long period of time. The problem is that Congress is focused on getting reelected, and politics have overtaken pragmatism. And there's a phenomenal opportunity sitting in front of Congress and the president to really make permanent, lasting changes to the United States economy, just like Ronald Reagan did, if we could just get together and compromise and do what's in the best interest of the republic, rather than worrying about how I can get the most votes in the election.
It's a hard case to make when it's a couple of months away from the U.S. elections. Scott Minerd, thank you so much. Scott, as always, is the Chief Investment Officer of Guggenheim Global, overseeing $260 billion in assets under management. Taylor, I'll send it back to you.
Thank you. As always, there, of course, to Bloomberg's Scarlett Fu, and she's hosting Wall Street Week this week, airing 6 p.m. Eastern tonight. And coming up, with the U.S. and China set to review the terms of their trade deal, we'll discuss the state of play between the world's two biggest economies. And we do that with Republican Senator Marsha Blackburn of Tennessee. This is Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg Television and Radio. I'm Taylor Riggs in New York.
Then I'm Kevin Cirilli in Washington, D.C. Taylor, it was really interesting to see Jared Kushner respond to Democratic critics in terms of their argument that there needs to be more coalitions and more coalition building in terms of a foreign policy approach. Contrasted that with what the administration feels is a more isolationist strategy that has emboldened the United States to better get foreign policy results. So I actually spoke earlier this morning with Senator Chris Coons. He's a Democrat from Delaware, Joe Biden's home state, and I asked him specifically about the foreign policy administration that the Biden administration would carry out and about that UAE-Israel deal. Take a listen to what he told me.
Frankly, overall, I think it is positive to begin easing the isolation of Israel from the region, this is just the third Arab country to recognize and begin normalization with Israel. What was announced the other day was just an agreement in principle. There's a lot of details to work out. But in some ways, the most important part was a suspension of Prime Minister Netanyahu's movement towards annexation, unilateral annexation of land in the West Bank. To do so would have finally shut down any possibility of a two-state solution. I strongly support a two-state solution and oppose unilateral annexation that would have foreclosed any possibility of a Palestinian state. It's important that folks pay attention to the details of the statements made by the UAE Ambassador Al-Taiba, who I know and appreciate his hard work on this, which was that they continue to support the Palestinian cause. This was an important tripartite agreement between the United States, Israel under Prime Minister Netanyahu, and the UAE. And I do think it'll contribute to some reduction in tensions in the region. And I hope it'll be followed by other recognitions by other Arab states.
And just a final question, how would a Biden administration handle this particular issue? And I get that that's a big question, but just how would he look to rally allies between the U.S. and Israel?
Well, I think in your question, you summarized it, to rally allies. One of the challenges with the way that President Trump has conducted foreign policy is he's used the tool of tariffs to essentially beat up some of our closest friends and allies. It has distanced us from countries like Canada, Germany, Sweden, France, the UK, Japan, and South Korea, because the imposition of national security justified steel and aluminum tariffs, for example, have caused some real economic tension and some political tension. In the Middle East, we have a range of partners and allies who I think could be brought together. But a resolution of the Israeli-Palestinian issue is an important contributor to full stabilization of the region. Part of what's happening here is that the Emirates, the UAE, really view Iran as the biggest issue in the region, the tension between Sunni and Shia, between the radical regime in Tehran and what they're doing in the region is a more pressing security threat than their concerns about the unresolved Israeli-Palestinian tension. That's a development that's been underway for more than a decade, and I would expect a Biden administration would continue to work with our vital ally Israel and with our regional partners to try and achieve further stabilization and improve security through resolution of some of these long-standing conflicts.
That was from my conversation earlier today with Senator Chris Coons, a Democrat from Delaware, and you can check out that full interview wherever you get Bloomberg, including on the Bloomberg terminal. Red headline now crossing the Bloomberg terminal. Reuters reporting that the U.S. and China have planned trade deal review delayed. The U.S. and China planned trade deal review is delayed. That according to Reuters. And now, with trade talks set to continue this weekend between the world's two largest economies, I bring in Senator Marsha Blackburn. She is a Republican from Tennessee and someone who has been increasingly critical of China. She serves on the Judiciary and Commerce Committees, among others. Senator, just right there, that review on the U.S.-China Phase 1 trade deal is now delayed, according to Reuters, ahead of these talks. There has been an escalation in the tensions between the U.S. and China, no doubt.
Definitely there has been. And, you know, Kevin, I think it points specifically to the issue that China felt for decades they could take advantage of us. They did a good job of taking our jobs. You know, it's like with the pharmaceutical industry in the 40s, rather, most of the plants were built in the 40s, and in the 70s, instead of modernizing those plants, what did they do? They started to shift that production to China in the 70s and 80s because it was less expensive. It was cheaper. And where did we find ourselves with COVID? That we were not making the active pharmaceutical ingredients we needed, that all of our antibiotics were made in China. And that is why there is such a push right now to repatriate our pharmaceutical manufacturing. So, and Menendez has joined me on that bill there in the Senate. But here's the important thing to remember. They thought they could do it because we had let them take advantage of us, whether it was pharmaceuticals or semiconductor chips or electronics or items for our military complex, taking advantage of our farmers. So now we are saying, no, China, you need to come into a proper standing with the other nations of the world. But that's not what China wants. China wants to overtake the other nations of the world, us included.
Senator, when I talk to economists and when I talk to traders, they're not really blinking on the notion that the United States might ban WeChat. And in fact, there's been some reports that Silicon Valley has actually urged the White House to reconsider. However, when I talk to Democrats, whether it be people like Mark Warner or people like yourselves, they're saying that this escalation, particularly as it relates to big tech, is here to stay. What's your message to Wall Street traders who might not specifically grasp the reality that this is a nonpartisan issue in Washington, D.C.?
Well, it is a nonpartisan issue, and I've been leading that technology task force. Here is what we know. Every company in China is partially owned by the government, which is the Chinese Communist Party. They are trying to build a global spy network. Huawei is the foundation for that. You see them pushing this equipment through their debt diplomacy. You also see, through the utilization of applications and software, that they are infiltrating that down to the individual level. It's not just enough to spy on the government or companies. They are building a virtual you for people that use FaceApp or TikTok or WeChat. Now, this is why you have seen us say, if you are a member of the U.S. military, if you are employed by the U.S. government, you cannot put that on your phone.
Senator, do you now need to see TikTok and WeChat separated from their parent companies? Is that the end goal?
Well, you know, we know that Microsoft is looking at the purchase of TikTok. And what you would have to do is make certain that China is not cloning that data and holding that data, and that Americans are going to be protected. Their privacy is going to be protected. You have to make certain that that is going to be a U.S. housed, not only held, but housed entity.
Finally here, stimulus bill. We've yet to see one. Where are we on compromise?
Well, you know, we have had so many things we've put forward. And what the Democrats have said, no, we want $3 trillion. We want it as a blank check. We'll tell you later how we're going to spend it. But I will tell you, every employer I have talked to has said we need to get people back to work. Every educator and every parent I've talked to has said we have to get children back to school. We wish that our colleagues across the aisle would come to the table and work with us. We feel like there is agreement on money for schools. There is agreement on another round of PPP for some of these companies like live entertainment venues and restaurants and motor coach industry that absolutely have not been able to open. We think that these components, we should take a vote on those and finalize those. And we find it just, it is inconceivable to me that they are so dug in to their number that they will not come to the table and say, okay, let's pass the things where there's agreement and let's continue to work.
Thank you, as always, there, Senator Marsha Blackburn, Republican of Tennessee. Kevin, great to have you back as my co-host this hour after you've been running around. Push the story forward. Come Monday, what do we want to see out of the conventions?
It's going to be fascinating to see just how the optics of the convention and how Joe Biden tries to navigate through the more progressive wing and, of course, the more moderate wing of the party. And hey, you and I are runners. We can run wherever we want, right? We could run all over these
We're
cities.
going to be running marathons all weekend, and stay with us because the Marathon of Balance of Power, it continues next on Bloomberg Radio. This is Bloomberg.